All righty. We've got Mitchell Amsler. Did I pronounce that right?
That's right.
Okay. You're with CU Capital Management. What I thought we'd do is kind of spend a few minutes, talk a little bit about you, your story, and then kind of go into exactly what you're doing and how you benefit the credit union space.
Perfect. Okay, thanks, Greg. Appreciate it. So, yeah, we have a CUSO that has been around for about 5 years now. And before that, I worked in the financial services space for about a decade and continued to see opportunities to serve credit unions where they were being underserved. So I think folks outside the credit union space tended to not focus on opportunities in the industry for a number of reasons, but I continued to kind of see that there were opportunities where credit unions it seemed like were being underserved. And one of those was in sort of helping them with some balance sheet management and specifically with real estate that they owned and trying to figure out a way for credit unions to access the value of the real estate that they owned and that they utilized. So that's branches and office space. And spent about 3 or 4 years just getting to know folks in the credit union industry, um, talking about this idea, talking about if it might make sense to explore how they could access the value of this real estate and really trying to understand what was a way to do this that worked for credit unions and made sure that they were protected in looking at that. And that's how ultimately, we arrived at the idea to do this with a CUSO structure. So that means that, credit unions are involved in the ownership. So we didn't bring in, outside investors or, work with, investment funds out of New York or things like that. This is really about setting up a structure where you've got credit unions helping credit unions. And I think that's really the ethos of the movement as a whole, but specifically how CUSOs can be very useful for the space.
Sure. Now, as we kind of talked just for a couple minutes before we started, I have talked with a number of different credit union CEOs over the years, and I would say a lot of credit union CEOs, especially with the smaller credit unions, are not overly familiar with the CUSO concept. I think it's starting to get a little more traction. Literally, I was at a CUSO conference a couple of years ago, and we actually have a project we're working on now that is going to be a CUSO, and I know there's different steps involved, but the main things that got us looking into it is a way to be able to have some shared costs instead of all of the costs being on one credit union. You spread the risk with expenses. Basically, two things. Either you're looking at revenue, ways that the credit unions can generate more revenue, or B, looking for ways that credit unions can come together to share in expenses instead of each credit union spending X number of dollars for something specific. They can divide that amongst multiple credit unions and be able to save money. So basically looking for ways to, increase revenues or decrease expenses. Why don't you just kind of share with us how that journey on just starting the QSO came about?
Yeah, I think that's a great way to put what exactly the general goals of a CUSO are. So that's a credit union service organization, and I think it's right. It's to either streamline your expenses and save on operational costs or efficiencies on that side, or it's to generate revenue or growth opportunities. And backing up, I think just a second. So a CUSO, right? By definition, it is an entity that is not a credit union, but it is owned in part or in whole by one or more credit unions. So you could have a CUSO that is wholly owned by a single credit union, but often what you see a CUSO that is owned in part by multiple credit
Multiple credit
unions, and they
unions.
kind of come together there to pool their resources and structure a new entity. And then the other side of that is that a CUSO has to primarily serve credit unions or the credit union space. And so it doesn't mean, so what that means is that a CUSO, it could also have a relationship with a bank or a insurance provider or some other non-credit union entity. But overall, the majority of its services, the majority of its revenue have to be from serving those in the credit union space.
Right.
And so,
My understanding is like 51% of the
yeah,
service offerings need to either be to credit union members and or to credit unions.
correct. Yes, I think that's a good way to put it. It's just, it's that's the definition that they'll use that the regulators come in and look at. What are you doing? Is this primarily what your activity is? Um, and so I think what you traditionally saw was that initially CUSOs came about because credit unions would come together and say, well, we can have a back office collections operation, or we can have some sort of strategic loan servicing here, or we can have basically even just HR. We can come together, we can set up a company that can serve multiple, often smaller credit unions, and share those expenses and share that load. And so, what happened with our CUSO is that as I was exploring this opportunity, we can talk about that in a little bit on sale leasebacks for credit unions. And so, how do you access the value of their real estate? Ultimately, all roads ended up leading me to CUSOs. And so, one of the folks that I ended up connecting with through a couple of credit union CEOs was Jack Antonini, who used to lead NACUSO, which is the National Association of CUSOs. And as soon as I talked to him about this idea of that we had, he said, "Well, the person you have to talk to is Guy Messick, who is sort of like the guru of CUSOs, who is,
Yeah, he's been like, yeah, I've listened to a number of his stuff. He's like the grandfather of CUSOs. And
yes,
so have you had a lot of interaction then with Brian Lauer?
yes, yeah, exactly." And so now we work very closely with Brian Lauer, who, was working with Guy for many years, and ultimately now is running the firm that they had once Guy retired. But when we first connected, Guy was still a lawyer with Messick, Lauer and Smith, and was kind of the CUSO lawyer for over 3 decades. And I think that's why the CUSO movement is where it is today, because he kind of saw the value of that and was really a champion for that for credit unions. And so he really helped us get this off the ground to say this idea really should be about credit unions supporting credit unions, and a CUSO structure is going to be by far the most beneficial and by far the most understood structure for credit unions in the space. And then once Guy retired a few years ago, we started working with Brian at Messick, Lauer and Smith, and now Brian is our counsel for the CUSO, and then Guy still has a role as an advisor actually for our CUSO.
Yeah, I met Brian back in 2024. He was like the main speaker at a CUSO conference I went to, and actually probably a year prior to that, I bought his book. So he wrote a book on CUSOs. So I was getting familiar with that space because I think as more and more CEOs look to finding ways to either increase revenues or help the bottom line, possibly through reducing expenses. And there's a lot of different shared services that can be done through a CUSO, whether it's like you mentioned a couple of them, and I've seen collections, fractional CFO services, marketing, like you mentioned HR, especially with a smaller organization, even a $100 million credit union probably doesn't make sense to have a full-time HR person. But if you had a few of them coming together, now it makes sense, where they can share in those expenses. And
Hmm.
so, kind of curious, from the time you decided that you were going to go the CUSO route, how long did it take so you were actually able to be, up and running?
So I
Organizing
think,
because you've got to set up
mhm.
your entity and organizing it and structure with the paperwork. And so, what did you have to? How long did it take, and what did you have to do, like with NCUA and that kind of stuff?
Yeah, so it's having someone like Brian or Guy, guiding that process is invaluable. I think you can't and you shouldn't just do this on your own for the first time. Once you understand, what the process is and what the regulatory requirements are, We now we have like a network of CUSOs. So we've got close to a dozen CUSOs that we've set up that are all part of our CUSO structure. And now there's just a process for setting that up, and we know how that works. But when you look at how you would initially set this up, we worked with Guy and then with Brian to do that. And it really is just about, in our case, it can be a C Corp, it can be an LLC. So we have an LLC structure. And then where the CUSO designation comes in is when you get that first investment from a credit union. So that's where the switch flips from saying, hey, this is just a normal operating entity to a CUSO, and now you've got the regulatory requirements. So, one of those is registration with the NCUA within, I think it's 60 days, and then an annual reaffirmation of that. So you say, here's where my dollars came from, the credit unions that are part of this. And then you kind of you do that again every year. So that way the NCUA has an understanding of where credit union dollars are going into the CUSO space. And then the other thing you've got to do as a CUSO is you've also got to be audited every year, just like a credit union would be, which, when you think about it, it makes sense. And it's really to make sure that if a credit union is investing dollars into another entity, whether it's wholly owned or owned in part, the NCUA needs to make sure that they're comfortable that those dollars are safely invested and that the entity is of safe and sound stature. And so that's where, every year then we get an audit as well. So that way that's passed back along to our CUSO owners for their regulatory inspections and for their auditors. Those are the primary things that you have to do.
So you say audit. So you have an outside auditing firm come in and audit you every year, like most of the credit unions have. Now, what about NCUA examinations? Do you guys have an examiner come in and review things too, like we do on the credit union side?
So we have the outside auditor, but we don't have an NCUA examination that we have to undergo as a CUSO.
Okay.
What we often have though is we have our CUSO owners will reach out with questions from their own examiner when the examiner's in there to say, can you provide this support, this documentation, et cetera? Our examiners requesting it as part of our credit union examination. And so that's how the NCUA sort of gets a handle on CUSO investments and stays on top of things.
All righty. Well, to kind of change gears a little bit from the CUSO side to actually what your CUSO does, why don't you, because I've got a couple questions off the top of my head, but for anybody tuning in, why don't you share exactly what your CUSO does for credit unions?
Yeah. So what we found, going back about 10 years is that the majority of credit unions own some or all of the real estate they use for their operations. Right. So that's going to be, about 2/3 to 3/4 of credit unions. So over 3,000 credit unions own real estate that they use. And it has to be carried on a credit union balance sheet at the cost that it was purchased, less depreciation. So that means if a credit union bought or built a property 10 years ago for $1 million, not only is it going to sit on their balance sheet at $1 million, but that number actually goes down over time because of how the accounting works. So it might only be, on their balance sheet at $500,000 now. There's no way for a credit union to access the value of that real estate. And so it's just sitting there on the balance sheet.
So actually with depreciation, it can negatively impact the financial statement over time.
Correct. Yeah. So every year it's actually, and every quarter it's actually going down over time and reducing in value, even though the reality is in most cases it's actually increasing in value over time. Not always, and you can't be assured of that, but certainly it's not going to be decreasing the way that the accounting works. And so what we wanted to do is find a way for credit unions to access that value. And so the way to do that is through a transaction called a sale leaseback, where a credit union, and this applies outside the credit union space as well, you can sell that property to a third party, and you turn around and you immediately lease back that property. In our case, it's under a long-term lease, so 15 to 20 years as the lease period, plus lease extension options to make sure that the credit union's protected for as long as they'd want to be in the space. And so what the credit union gets is they get immediately upon sale, they get net income, which gets an increase in net worth, which turns around and increases your net worth ratio in the quarter that that transaction closes. And so for a credit union, that can be transformational capital. When your only options really for raising capital as a credit union, right? If you look at a credit union versus a public company or a private company, right? You can't just go raise stock and issue stock and raise money from private investors. So your options as a credit union are grow net income, which isn't as easy as it sounds. It's the secondary capital subordinated debt space, which has gotten very cumbersome and very expensive. And frankly, what we're hearing is that credit unions aren't even getting, the feedback to move that forward. Or it's to sell assets. And in this case, the assets can be the real estate. So, you could take a credit union that's, really in that, they're well capitalized. They're at a net worth ratio of 8%, $100 million, $200 million, but they can't really invest the funds they need in the credit union to actually grow and start to generate more income and start to generate more opportunity for their employees and their members with a net worth ratio of say 8.5%. Because as soon as they start spending, that net worth ratio drops down into the sevens. And then your regulator comes in and says, well, what are you doing here? And how are we going to fix this? And what's the plan? And so if you look at something like a sale leaseback, a credit union could overnight earn, 1 or 2% in their net worth ratio in terms of a buffer. You could earn millions of dollars that you can now put into whatever you would want to as a credit union. So that could be simply like, using that capital in order to grow your investment, your loan participation pool and your investment opportunities and generate some net interest income. Or it could be opening a new branch, hiring new employees, turning around and investing in other operational CUSOs, for back office efficiencies, things like that, upgrade your core system. Really, whatever a credit union has wanted to do with capital, they can turn around and now do it through a transaction like this. And for a credit union, what it means is they don't really see a change in their operations. And so that's why we structure things the way we do. And more importantly, why we wanted to do this with a CUSO structure. And so kind of bringing things full circle, the difference with what we set up is that, the entity that a credit union sells to, the buyer of that property, it's not a real estate investment trust. It's not a Blackstone. It's not a private group of investors. It's a CUSO that is 100% owned by other credit unions. And so your buyer, your landlord is a CUSO. There's an alignment of interest between the buyer and the seller. And now we've got a CUSO ownership structure. So, we're there to make sure that there's a good relationship for the entirety, of that lease period between the landlord and the tenant. And it really helps, I think, to protect and to safeguard the future of a credit union when they're thinking about selling real estate and giving up a little bit of that control when you've got a CUSO buyer on the other side who's going to have that, alignment of interest, who's going to have that first or second degree separation in terms of a direct relationship and stuff like that.
Yeah. The whole people helping people concept, the mantra within the credit union space. And probably, I'm going to guess a few decades ago, thinking outside the box probably wasn't as popular as I think in today's day and age. I mean, just with technology, with AI, there's so many different things that, credit union executives get bombarded with. I think this is one where, you don't know what you don't know, and they say your mind is like a parachute. It only works when it's open. So I think if you look at this with an open mind, there's a number of benefits that could be, depending on the situation. But I think there's a lot of things that can benefit credit unions by taking a look at this type of thing. So I'm kind of curious. from the financial side of things, is there like a internal number that the CUSO looks at as a return on your investment when you're doing one of these?
Yeah, we want to make sure as a CUSO first and foremost that it's going to be a safe and sound investment for the CUSO owners. So that any funds invested are going to, be in a very safe environment where we'll be able to not only safeguard the original capital and ultimately return that, hopefully, with additional gains, but also receive regular income over time that can be passed through to the CUSO owners. And so what we're always looking at is, where is the real estate located? Is the credit union that's selling it committed to being in that space for the long term? Is the credit union that's selling the real estate also in a safe and sound position where they can benefit from the net worth and they can benefit from that income from a sale, but it's in order to help the credit union achieve, more sound financial footing and to grow. It's not to put, a band-aid on a mortal wound where
Sure.
the credit union is just not going to survive. And then, what we're looking to do is try to make sure that our returns for our CUSO owners are competitive with what they would be receiving elsewhere through structures we believe to be, slightly riskier or slightly more work. And so, right now, our target return for our CUSO owners is kind of 5 to 6% net on an annualized basis with little to no work on their side in order
Mhm.
to make sure they can achieve those returns. And then we're providing a quarterly dividend or distribution to our CUSO owners to get to that number.
So this is kind of a twofold question. Curious, as you're talking with different credit union executives, are you looking for new credit union partners in the CUSO? Or would you say you probably spend more time looking for credit union clients to work with the CUSO from a sale leaseback standpoint? And I know it's kind of a loaded question, but some credit unions probably are more interested in investing in a CUSO, and while others probably are more interested in using your guys' services.
Yeah, I think if you think about kind of anything new in the credit union space, right, it always just takes a lot of time to get people comfortable.
Sure.
And um, it's very difficult to find folks that want to be a first mover in a space. They want to make sure they can look at someone else who's done it and say, all right, that's a smart person, that's a smart credit union. They've tested the waters with their auditors, with their regulator, with their board, and it's worked out. So if they're doing it, then we can get on board. And so, what we really found is that at the start of this, it was kind of a chicken and the egg problem where you're trying to get a group of credit unions to invest in the CUSO and also trying to get a credit union or two to be willing to sell their property to the CUSO. And both sides kind of point and say, well, make sure, bring me something from the other side. And so over time, we were able to pull all of that together where kind of the stars aligned in order to launch. And then what we found is we got a great group of over 20 credit union investors into the CUSO to start, which was phenomenal.
Oh, really? So
Yeah,
so
that
you
was
started with 20 credit unions.
yeah. We
Wow.
started with just over 20 credit unions, and that was, a testament to relationships that Guy had from his career and to the connections we built, over years of talking to folks about this. And then really, I think it speaks to the attractive nature of the structure as well, and the willingness for credit unions to help other credit unions, where you can kind of really have that rising tide, lifts all boats mantra really come true. And so then we had our 20 plus credit union investors in the CUSO, and then we were slowly building a pipeline of trend of sale leaseback transactions to do to work with credit unions that were interested in selling property and to get that gain. And then it's been about balancing that over time. And so now we've got 24 CUSO owners. We've got a very robust pipeline of transactions that we've completed and that we're working on right now, that should close, throughout the rest of this year and going forward. As you can imagine, a lot of these conversations can take 3, 6, 9 months, 1, 2 years, really, to make sure a credit union is fully comfortable with the pathway to a sale and the implications of that. And, we're there to kind of hold their hand along the way. And so now we're always looking to build that pipeline of potential credit union sellers and willing to talk to folks who want to say, hey, how does this work for me? What is my real estate worth? What would a transaction look like? But then on the other side, in order to make sure we can keep doing, good transactions for those sellers, we really do need to grow our CUSO ownership base as well. And so that's what we've really been focusing on the last few months, as we want to make sure we can bring new credit unions into the CUSO as investors. They start earning a return immediately, and that new ownership, that additional ownership, will allow us to keep working on all these transactions that we think will be great for the credit union industry as a whole. And
So
then,
Mitchell, with talking to potential new credit unions to be part of your CUSO, do you have like a minimum investment into the CUSO?
yeah, so we've structured things in a way we think is as beneficial to the CUSO owners as we can in terms of structure and relationships. And so it looks kind of like investing into a mutual fund or an ETF or something like that, where our CUSO owners are not investing into individual transactions. They're investing into the overall CUSO. And so what that does is that gives them access to the diversification and the protection of the returns from every sale leaseback we've done and that we will do that gets approved by those owners. And so you get kind of that blended return there. So that's, I think, the first thing that we think is good. There's also some liquidity there for CUSO owners, where if they ever wanted to or needed to sell down or fully exit their position in the CUSO, you're not trying to exit 15 different investments. You really just have one
Just have one.
investment in the CUSO. And then we also wanted to give them flexibility. And so our initial investment minimum is $1 million into the CUSO. And that's just to make sure there's enough skin in the game there. But we have no requirements for any follow-on investment. You will always have the opportunity, but never the obligation as a CUSO owner to invest more funds into the CUSO. And so if we grow through additional transactions and new real estate assets, and a credit union said, hey, we're a $200 million credit union. We just don't have the capacity to invest more into the CUSO as much as we like it. That's okay. They now will own a slightly smaller piece of a larger, more well-diversified pie. And so, we've had credit unions that invested their first million, and then that was all they've done. And they kind of expressed at the beginning that was all that they could or would want to do.
And then sometimes there's requirements though too. They can only have so much of their funds invested into CUSO operations. So
correct.
do you
Yeah,
guys
that rule
sometimes
of
have
thumb
that come up as an issue?
Yeah, that rule of thumb is 1% of their assets into CUSO investments. That's not exactly how the formula works, but that's the easiest way to get
come up
there.
with a rough
Yeah.
conversational number. So
And there are a few
$100
states that allow higher limits if you're a state credit union in certain states. But $100 million credit union, exactly.
That's your $1 million.
$1 million.
Gotcha.
Yeah. So, we know that, our CUSO structure is going to be different than, like we talked about at the beginning, how a lot of credit unions view a CUSO investment as more strategic on the revenue or the expense and operational side of things. While ours does generate revenue, it's more about helping the credit union movement overall, helping other credit unions, and earning, a good return immediately that should be comparable to your loan returns right now, if not better after you factor in things.
Yeah, that's it. It's a great concept because there's a lot of credit unions that probably didn't know this type of thing even existed. Sincerely, a couple of years ago when I started exploring CUSOs, I was, my mind was definitely opened when I saw how many different areas that CUSOs work in. Pretty much any type of service that you could provide a member or provide to a credit union, there's CUSOs out there, and it was definitely interesting to hear how you guys came about and what you guys do. So Just to kind of end real quick before we uh, get to the last of our time together, if somebody's interested in talking with your firm, either from a CUSO investment or to discuss how your CUSO can help their credit union, how can they find you?
Yeah, so I think the easiest way to get in touch with us is either to go to our website, which is cucapitalmanagement.com, or just to email or just to Google, that our QSO name, and that'll pop up. We've got a contact form on the website. We've got a lot more information about what we talked about here today, or can email info@cucapitalmanagement.com, and then we'll have someone get in touch.
All righty. Well, I would like to say that this has definitely been eye-opening, interesting to hear about CUSOs, hear about how your CUSO is serving the credit union community. And I'd like to thank you, Mitchell Amsler with CU Capital Management for your time here today.
Thanks, Greg. Really appreciate it. Thanks for giving me the chance to talk about QSOs and about our QSO as well.
All righty.